Investing is often described as logical. The math makes sense. The long-term data is clear. The explanations sound convincing. And yet, investing still feels risky. Not just sometimes, but emotionally uncomfortable. So why does investing feel dangerous even when the reasoning is solid? Most people think investing feels risky because they don't understand it well enough. That once the math is explained, the fear should disappear. But this assumption misses something important. Investing doesn't feel risky because it lacks logic. It feels risky because of how risk is experienced. Imagine this. You put money into an investment. At first, nothing happens. Then the value moves. Up one day, down the next. The long-term explanation says, this is normal. But emotionally, your brain experiences loss immediately and gains only abstractly. That mismatch creates discomfort. Here's the key idea. Your brain reacts more strongly to potential loss than to potential gain. This is why investing feels risky even when the expected outcome is positive. The brain doesn't experience probability. It experiences uncertainty. And uncertainty feels unsafe. This connects directly to earlier topics we've covered. In Why Credit Cards Don't Feel Like Real Money, we explained how delayed consequences change how cost is felt. In Why Small Purchases Add Up Faster Than You Expect, we showed how frequency quietly shapes outcomes. In Why Earning More Doesn't Automatically Fix Money Stress, we explained how emotional relief doesn't always follow logical improvement. Investing combines all three: delayed results, frequent value changes, emotional expectations. So even rational investing can feel emotionally unstable. Another layer makes investing harder: visibility. You don't see long-term progress daily, but you do see short-term movement. So your brain focuses on what's visible, not what's statistically meaningful. That visibility exaggerates fear, not because the risk increased, but because attention shifted. When investing feels scary, people often assume something is wrong with them. They think, I'm just not built for this. But this reaction is normal. Investing asks the brain to tolerate uncertainty without immediate feedback. That's not intuitive. So here's the simple truth. Investing feels risky not because it's irrational, but because it requires sitting with uncertainty. And uncertainty is something the brain resists by default. If this helped explain why investing feels risky, even when it makes sense, comment uncertainty. Not because risk is imaginary, but because uncertainty is emotional, not mathematical. Investing isn't just a financial challenge, it's a psychological one. Understanding that changes how the fear feels.